Okay, there we go. Alhamdulillah, folks. Welcome to our coaching call. It is already February of 2023. Super fast. Super fast. So I hope if you attended the goal setting one in January, I can't remember who attended. If you did and put in some actionable items, great. And if not, review, because it's on our YouTube channel somewhere. Go and find it and see how best you can start setting goals. So tonight, based on Rizwan's request, I'm going to be covering really quickly the 5 I's of Islamic finance. Number 1, okay, that's the planning methodology. Number 2, I'll give you a quick market update about what's happening in the market. Number 3, you can ask me your questions about your investing, about, well, basically everything personal finance. And inshallah, by then we should be able to finish before 10 p.m. about an hour. And if we do have extra time, what we can do then is have some actionable tips that we can use on. Okay. All right. So here we go. Alhamdulillah. Tonight is a Monday night, and it is the beginning of February 2023. Time passes very quickly. How many of you realize, right? Next thing you know, March is here. Then it's Ramadan. Ramadan is here. Hari Raya is here. Then it's May, June, middle of the year. Right? It's going to be damn fast. After middle of the year, next thing you know, Hari Haji, three-quarter of the year is gone. Nanti kat November. That November, shit, December. They're going to start setting goals again. Things move fast. Things move fast. So based on Rizwan's request, 5 I's of Islamic finance. This can take very quick. So 5 I's in this order is income, insurance, investments, independence, and inheritance in Islam, inshallah. And so the first I, income, is all about your cash flow. As I was sharing earlier, it's about cash flow, how you earn your money. We want to make sure the money you earn is halal. Then how you spend your money, that's your expenses. Because once you have your income and your expenses, you can track what's your savings rate, you can track your investment rate, you can track whether there are any missing numbers. Quite a few times when I help people track their expenses, they say I earn 100, I spend 50. I should have 50 left behind, but actually I got 10. So there's a 40K deficit somewhere is missing. So when you track that, you know where it is. And within income, we cover wealth, W-E-A-L-T-H. Right? Wealth is a money management formula and concept that we use. We also use a very low-tech tracker called the Kertas Lipat Lapan, and of course within the income we also want to make sure we're paying zakat. We want to make sure that we're setting the right goals. So that's income. That's why it's the first one, because if you don't manage this part, everything else falls to the ground, crumbles, right? I like sharing this story about how I managed to pay off $60,000 in debt after I left banking by using just a white piece of paper. Track. Serious. A lot of people don't know that I lost my job. I think a few of you know that I lost my job in banking, right? But some of you don't know that I was 60K in debt, and using just a piece of paper every day, I track. I found all my leakages. I found all the extra cash I needed, and I paid off the debts. I think within a couple of years, I cleared off. Can you imagine that? 60K in 2 years. That was one of the biggest achievements. So that's income. Now, insurance is actually very simple. I just had a conversation with somebody this morning. They were asking me about what kind of insurance they need, how much is enough, and it's actually super simple. The easiest thing in Singapore for us as Muslims is this: insurance all haram. There are no halal insurance policies available, none. But because of that, and this gels with my personal philosophy and professional philosophy as well of buying term and invest the rest. How many of you have heard of that? Right? Buy term, invest the rest, where you buy low premium, cheap plans with high coverage, but no cash value. So when you do that, you actually are looking at pure insurance, which is pure coverage for minimal cost. That's what you want. Then you got the spare cash, you can invest. And so because there are no halal options available for us, then you must buy the bare minimum. Because from a darura perspective, necessity, you cannot buy too much insurance, because then you are exposed to riba, you're exposed to unnecessary haram elements, right? And again, it gels back to my philosophy, right? Buy term and buy just the right amount. Like, for example, how much is enough for death, right? So I'm going to cover 5 types of insurance. I call it the 5+1. So in this order of importance, if you haven't done so, do get it. First one is hospitalization. So you go anywhere, anything happens to you, first place is A&E, correct? In a hospital. Especially if You have an injury, accident always happen at the worst possible time. Never when the clinic is open in front of you. Never. Right? It's always malam-malam buta, when your wife pregnant, when something really happened, budak-budak nak tidur, semua kena fever. At 8 p.m., 9 p.m., all clinic closed. So first step is always A&E. When you go there, if you are hospitalized, your hospital plan covers you. But if it's minor enough that they will discharge you on the same night, then you get your personal accident. Because personal accident are those plans which are often overlooked. They're simple, easy, mainly for accidents. Cheap. $110, $120 can get one for the whole year per person. Very cheap. But these are for the things that are minor, that don't land up in hospital. Things like a sprain, things like a burn, insect bite. Minor things. My son sprained his ankle. We went to A&E, first stop, A&E. Whether or not he was going to be warded was going to determine after the x-ray. So he had 2 x-ray from 2 angles. Turns out it was a sprain, not a fracture. So alhamdulillah, no need to be warded. But total, I paid $130. My PA plan, personal accident plan, covered that. So I got reimbursed $130. Great. Right, so all in all, that little misadventure, I was compensated $130. So no money out for me except for time. Okay, so first 2 layers, these 2 most important. Third layer, once you hit 25 to 30, you need to get critical illness cover. Early stage, late stage, cancers. In fact, Rizwan, is it okay if I share something about your situation?
Can.
Can. Our brother here, Rizwan, diagnosed with early stage cancer at age berapa?
32.
Age 32, reality, cancer. I'm 39, no? And when Rizwan told me his story, I was amazed. That he got the coverage, he got paid out, his employer covered him, etc., etc. So third layer is CI, critical illness. Don't take it for granted. Because statistics have shown 20% of us will get cancer. 20%. That's 1 in 5 people. So in this room, if one more person join, one of us will confirm kena. That's how common it is. Fourth layer is death coverage. How much to get? So it's a simple rule of thumb. I always say this. In terms, we call it the 2-5-10 rule. So for critical illness, early critical, you take 2 years of annual income. Late stage critical, you take 5 years of annual income. Death, you take 10 years of annual income. So if you earn, say, 50K a year, 2 years of annual income for early is 100K of coverage. 5 years is 250K of coverage. And for death, 500,000 coverage. A good term plan like this, if you are about 30, will cost you about $100. $100 a month. Cheap. I myself, I'm covered for 1 million death, 600,000 late stage, and 200,000 early stage. Does that sound like a lot? I have 2 mouths to feed and a wife to support. So to me, 2 years and 5 years of annual income is no joke. Because if anything happens to me during those times, I won't be able to work for the first 2 years for early stage. Late stage, confirm cannot work for 5 years. And if I survive the first 2 years, great. If I don't, it might go into late stage. And at this point, it's either I live or die. That's where that money pays out to support the family. And then if I die, 10 years of annual income. Very straightforward. CI and death. So if you know people who need to look at insurance, tell them this 2-5-10 rule. Simple. Hospitalization, personal accident, CI, death. 5th layer is disability income. If you already hit 30, you would have gotten the letter from the government saying to buy Care Shield. That one is if in the event you cannot perform your activities of daily living, like going to the toilet, showering, getting dressed, feeding, getting up from the bed, then they pay you a monthly income for the rest of your life. It's good. Disability income, 5th layer. And +1 is for ladies. Ladies, they have the female illness plan. Men, there's a running joke. You either live or die. Okay? Live or die. For ladies, you kena a female-related illness, it can become long-term and chronic. So for those of you who have women in your life, I recommend getting female illness plan. Okay? Important. So just to recap, hospitalization, personal accident, critical illness, death, disability income, +1 is female illness coverage. So it's 5 + 1. Simple. Get just enough to cover you, fit your budget, fit your liabilities and dependents. Done. No need to buy so much. Don't mix insurance and investments. Don't buy whole life plan. Don't buy endowment plan. All these haram. No insurance agent will tell you this.
Okay. I got one question since you said that. Yeah, your term plan basically covers everything, all the 5 stuff. Does it? Don't have
Your term plan a good term plan should cover minimally these two: death and critical illnesses. A good term plan will cover this. But your hospitalization plan is called a shield plan. Personal accident is a standalone. Then your term plan covers these two. Your care shield should get one here. And then your female illness should be a standalone plan. Some providers will give you a female illness coverage as a rider to a plan. But I prefer standalone because standalone is you own the policy and it's better in that sense because you have the option of choosing which one.
Okay. Okay. So basically, so a term plan. Actually, which company are you at? So maybe I can
Singlife.
Singlife for the term plan.
So let's go a little bit deeper, if that's okay. Is that okay? I go a little bit deeper. And the reason I use the Singlife one, it's actually because number one, the sum assured, they have what they call a high sum assured discount. When I did the numbers for $500,000 coverage and I did $1 million coverage, the difference was only $2 per month. Because of the higher sum assured, they can give me a discount. So when I look at it, I do my numbers, I actually need $1.2 million of coverage. So I got $1 million term plan instead of 500,000. I look, it's actually cheaper. Then lain so mahal sikit. So that's reason number one. Number two, my critical illness plan is something called the multi-pay CI plan. Okay, multi-pay critical illness. Now, the reason why I chose this one is because it lets me claim multiple times in the event I get a CI. So if I can a late stage CI, they will pay me that sum assured, right? Whatever number is there. Say, for example, just now I said 200, right? So they'll pay me 200. And if I'm diagnosed with a second early critical that's not related, so for example, I can get cancer one, then after I get a heart attack, I can claim a second time. And if it goes into a late stage, I get 3 times that amount, so 600. And I can claim the 600 twice. So multiple layers. That's where, because like I said, we know that cancer will happen to 20% of us. And the relapse, the relapse, reoccurrence, re-diagnosis. So honestly, I see case studies. I see some of my friends also kena. I'm like, people who don't buy CI coverage are gambling that, people say insurance gambling, right? Are gambling that they are not going to kena. Okay? Is that bad?
And Afiq, which company is this? Like you use the multi... Is there other Singlife as well?
Disability?
For the critical illness one.
Same. So the term plan has the critical illness. So both are under Singlife.
Oh, okay. So your Singlife has critical illness and...
Correct.
Critical illness?
I break down what I have. I break down the 5+1. Hospital plan. I go with AIA. Because AIA has one of the highest coverage and the premium is reasonable. Cheapest on the market is NTUC. But with AIA, I pay $20 more. I get twice the coverage. So my entire family is under AIA. Personal accident, I buy under Liberty. Liberty is what we call a general insurance company. So they're not a life insurance company. They only do travel insurance, car insurance. They do personal accident and they do commercial insurance. So this particular plan, I pay $120 per year. Sorry, $130 because now 8% GST, 129. So I pay $130 per year per adult. So my wife and I, 130 each. The 2 children get it free. So to me, no brainer. Might as well. Right? I've claimed from them multiple times already. So like the A&E visit last month, $130. Right? Exactly the premium that I pay. No problem. So AIA, Liberty. Then my term for critical illness and death, I got from Singlife. So I got it from Aviva, but Singlife bought over Aviva. So now technically it is Singlife. Okay. If I say Aviva, then you cannot find Aviva anymore. Now it's Singlife. The Care Shield, I also bought from Singlife because they have a supplement that adds on, so I get more coverage in the event I'm disabled. Okay. The +1 for female illness, I got for my wife from NTUC because they have the only standalone female illness plan. and they have a free checkup every 2 years, early screening and all that. So she goes every other year just to get screened. And it is fantastic because that one also got multiple layers of coverage. She is covered for diagnosis, they pay her an amount. Surgical, pay another amount. Reconstruction, cosmetic, pay another amount. So for example, diagnosed with breast cancer, have to remove the breast, have to reconstruct the surgery, the area. This is 100%, 50%, 100%. So she total get 250% coverage.
Okay.
Yeah.
And how much are you paying for a single life?
This one was 199 because I bought it when I was 36. 199 a month. So for 600,000 of late stage CI is quite high, by the way. Think about it, 600,000 is very high. And for only 199, because that time I bought, they had a 30% discount campaign, perpetual. So be smart. Be smart. Choose the different insurers. My role as an IFA, independent financial advisor, I go and compare all the rest. Who do you think benefits first? Me lah.
True.
Check. So if you guys need a quote, just drop me a text. Okay, drop me a text privately, send me your information, say, hey, I want a quote for the full insurance quotation. I'll get my assistant to go and do it. Might as well make her earn her pay, right? In fact, on a daily basis, I think I do 2 or 3 quotations. People just send me their details. I send it to my assistant. She generates a quote. I send to that person. They can compare. Done.
So actually, you recommend to actually go for different insurance companies for different plans, lah.
Yes.
Right.
Why go with all the same? Because the deep dark secret is after a while, all insurance is the same. After a while, it's all the same. But how some of them earn their margins is certain plans they make more expensive, certain plans are cheaper.
So you have to figure out which ones is worth it for the money.
All right.
Okay, can. Thanks, Afiq.
So that's why we always get a quote, right? And then we compare from multiple sources. Like typically when I run a quote for a client, I will quote for AIA, NTUC, Singlife. We can also check with AXA, which is, as of February, is now HSBC. It's no longer AXA already. We also check with Manulife and Tokio Marine. So many places we check. Because our systems are fantastic. Just key in, aku nak macam gini, come out. And also it helps that I have an assistant. So yeah, if you ask me how to use the system, I will tell you and record it. Okay, I don't know how to use. My assistant know how to use. That's why I pay her the big bucks. So that's it for insurance. Questions for me on insurance, because we spend quite a lot of time on it. No?
Actually, Afiq, you said what endowment plan all haram, is it?
Yes.
Are you talking about the those kind of ILPs, is it?
ILP endowment are different, but they are what we call insurance plans with a cash value. So there's 3. Whole life, endowment, and investment link. So these 3 have cash value. For the first 2, whole life and endowment, your money is invested in their what they call the participating fund. That means it's a black box. They only roughly tell you what they invest in what percentage, but how they generate the money, we don't know. So non-compliant. We cannot take the what do you call that? The bonuses and the returns from there. Whole life and endowment. ILP is up to you what are the unit trusts to choose. And not all companies have the halal ILP, have the halal funds. And then the performance is based on whether you're lucky to pick the right one at the right time, if you don't have the expertise. But we all gone through HIC already, so you should know what is the asset allocation to do, what are the mix to do. So there are ILPs out there with halal investments inside, but the problem with ILPs is this: it's still an insurance plan. The older you get, your coverage must still be maintained, and the cost goes up. So as you grow older, the cost of insuring you goes up. They will take that cost from your investments. So even if you're profitable, you will start to see your profit, your value go down, because the older you get. But the irony is this: the older you get, you need insurance cover, yes? Up to a certain point, you need that money for retirement, yes? So you either give up the plan early, no coverage, just before retirement, to get the money out, or you hold on to the plan, continue paying for the insurance, but your retirement nest egg keeps getting smaller and smaller and smaller. That's why I don't like ILP.
Right. Yeah, yeah. I see, because the reason why I was asking, because like my fiancée was telling me her plans. So currently she pays a yearly premium of like 5,000.
Mak kau, apa dia beli?
Uh wait, she buy this AIA investment policy.
5,000, you say 5,000. My
Yeah.
entire families, my whole family is less than 5,000.
Yeah. Yeah, because that time so I just had a call with the insurance, like her insurance agent, right? I was like saying that the numbers don't make sense. Like
Rule
to
of
me,
thumb,
lah.
right? Don't spend more than 10% of your annual income on insurance. And that is if you are a family. If you're single, 5% is a lot already.
Right.
Of
General
annual,
rule of thumb, 10% of your annual income should go to insurance, not more, right?
if you're a family. If you're single and you're both technically not married yet, your insurance premium should not exceed 5% of your annual income. You think about it. If you earn 50K, 5% is 2,500.
Oh yeah, that's a lot.
Ha!
Yeah. Okay.
I give you an idea. You are how old again?
Yeah.
29.
29.
Okay, 29. If I do for you a term plan, even if I say $1 million death coverage and I do $250,000 of CI for you, it's gonna cost you about $100 a month, which is about 1,200, right?
Yeah. Okay, can.
Okay, so tonight was not about
need to review
insurance.
Sorry, I think.
Tonight was not meant to be about insurance, but clearly it is. Okay, you have questions. This is what these coaching calls are for. Ask.
Oh no, because the thing is we are trying to plan out our finances for the future, right?
Yes.
So this seems to be quite a big sum that needs to go out every June of every year, yearly, if we were to continue with this lah. So we just started talking about finance because technically me and her we just met lah. So but we are getting married very quickly. So
Wait, just met? Wow.
Yeah, we met in October last year. So we're getting married in June lah, inshallah. Yeah. So one of the things about this is like we were talking about our finances lah. So she was telling me about her investments under AIA. So the first thing I thought about was okay, is it Sharia compliant or not? Because if it's not, then there needs to be a verification process, right? So from what I see, like the funds, I mean cannot really lah, like one of the plans already she has is like mainly under banks also. So that one cannot really, one of the sectors that we cannot invest in, right?
Yeah.
Then the other ones, when I was looking at the general plan over 20 years, like the returns for 20 years of investing, let's say if you were to put 100,000, you get only 30% of that, like as a appreciation over a period of 20 years. Then I was like, that doesn't make sense at all. It's like if you, I mean, from what I was thinking, I was like, they put like 5,000 every year. That's like, it doesn't make sense. Like why don't you just put it in a Sharia compliant ETF or fund, or some of the funds that you advise us to put in, and that will get us better returns and also safer also.
Yeah,
I feel yeah.
Important.
So yeah, correct.
Important. So when it comes to that, so then let's talk about investing for a while. Remember, so I said income, insurance, now investments, right? Investment, one of the key is, remember, HALAL, Halal investing formula. Make it a habit, so do it every month. Have a positive relationship with your investments, because habit should give you pleasure, right? Should give you a payoff. So you look at your investments, make it a habit. Wow, okay, I feel good, investing, even though market's coming down like right now. Later we'll give you the market update. Okay, market's coming down right now. I know I am going to be investing for the long term. So it's a positive habit. Allocate correctly. Right mix of assets. Stocks, bonds, gold. Quite straightforward. Equity, fixed income, precious metals. These three. Right? Of course, if you can afford it, have some in alternatives. Crypto, what do you call that? Crowdfunding, then you can have a proper allocation. But that's your what do you call it? Your rocket portfolio. Second, first L is long term. Look minimum 5 years, 10 years if you can, even longer is better. Second A is annual review. Like what you're doing with your fiancé. Once a year, have a look. Do I have all my finances in order? Is my portfolio on track? Am I hitting certain life stages? Is my projection in line with my actual returns? Do I need to reduce my risk because I'm older today? That's A. Last one is look for opportunities, L. Like right now, markets dropped 40% already. Sure. Good opportunities can be found here and there. Look up, read up, look out for good opportunities. So HALAL, that's investing. Because the reason you invest is to get the fourth I, independence. Where your passive income, your pokok kurma pays you a regular income that you can just say, hey, I don't need to work. Or I have one client, you know what he did? I think I got enough. My pokok kurma pay me about 3K a month. My children are already late teens already. I got enough for their education. I want to take a break. He quit his high-profile job. He became Grab driver. Okay, the whole family not happy with me. They blame me, saying that I made their father into a Grab driver. I'm like, suka hati dia lah. Okay, and I assured the wife knows the number, so the wife tak marah, the children, adult children, so they were saying, you've convinced my dad to be a Grab driver. I said, kids, it's fine. He is more than comfortable financially speaking. You all have enough money to go uni. He's got more than enough reserves. Now he's just drawing 3K a month. He wants to relax drive. You know what I mean? He said maybe he will consider joining the workforce again later on, but the dude, high stress job, like, high-end corporate management, everyday white hair kind, so that's his choice. And then the last one is inheritance, right? All of us are Muslim, we must have a wasiat. Because like it or not, we live and die in Singapore. The regulations we are bound by state that we must have a wasiat. If not, it's going to take more than 6 months, sometimes 5 years, for our next of kin to get our assets out. So, Akhil, if you're about to get married, whatever wills you have written today, marriage will revoke that will. Whatever CPF nominations you've made will revoke those nominations. Okay? Whatever insurance nominations you've made are not revoked. Okay? Write this one down, important. When you get married, your will is revoked, CPF nominations are revoked, or your insurance are not. You may want to consider redoing everything after you're married. Okay? Because your inheritance is to give what you have to who you want to, when you want to, in the way you want to.
Once we marry, that is different really, the rules.
Yeah, because we follow Faraid. We follow Faraid. For example, if today you're single, right? You're single, you pass away, your assets, most of it will go to your father. Right? Your brother doesn't get anything. Your brother doesn't get anything. Your mom and dad get 1/6 each. Whatever balance goes to your dad. Unless you have a son that I don't know about lah.
I don't. I don't.
Just making sure. Just making sure. But when you're married and no children and you pass away, your folks get 1/6 each. Your wife gets 1/4. The balance goes to your dad.
Oh, is it?
See? Because this is what we do. When I do my inheritance reports for my clients and I do wasiat for my clients, I have to do the calculations. So for inner circle, it's quite straightforward. Inner circle is always your ancestors, yourself, your descendants. So your parents, yourself, your spouse, and your children. In any of these, there is no male, then you have to look outside the inner circle. You have to look at uncles, you have to look at siblings, and even cousins. So quite complicated. Okay.
Oh, okay. Thanks, Afiq, for that. I didn't know at all.
Now you know. Important. Okay. Once you get married, you have to start planning all of this. And that's where go back to A, annual review. And so those are the 5 I's of Islamic finance: income, insurance, investments, independence, inheritance in Islam. Inshallah. I never get tired of saying that because every time I say that, bulu roma berdiri.
Yeah.
Questions for me so far. I spent half an hour on this. My goodness, that was not my intention. Anyone? Question?
Okay lah. Thank you for recapping on the 5 I's.
Thank you for asking. Right. The irony is I live this every single day. So for me, it's like at the back of my mind. If nobody asks, I'm like that. Like that. Okay. So how many of you are ready for a market update?
Okay,
Alright,
okay,
let's go.
Can? Okay, so the Fed raised interest rates by 0.25 points. Right? This was what day is it? Yeah, last week. They raised it last week. So the markets reacted positively. So a lot, if you look at your stock markets, a lot of it become green. They go up a bit. But let's look at the long-term trend. Okay, you will hear people say, oh, we're out of the bear market. You know, the bull run has started. Could this be the new 2023? I say we hold off first. Have some caution. Okay, have some caution because there is some space for the Fed to raise interest rates, number one. And number two, inflation has not come down. Because the reason they're raising interest rates is to bring down inflation. And so we wait for our inflation numbers for February. Then after we see what the Fed says. Okay, what if the Federal Bank, the Federal Reserve, not Fed Bank, they're not a bank. The Federal Reserve says, okay, inflation is starting to come down. They may consider holding the rate steady. That's where you might see the stock market start to recover. Right? That's where you start to recover and then start going back up again. But I'm still very much of the same mind that with higher interest rates means higher cost of borrowing, which means a lot of commercial entities who have floating rate loans, they have to pay more for their monthly loan repayments, which means the expenses go up. And a lot of the bigger companies, if you read the news, have been cutting headcount, right? If you look over the past couple of months, a lot of tech companies have cut headcount. I think the only tech company that didn't cut headcount was Apple. That came out in the news. Apple was the only one who didn't cut headcount. They go, okay, and why? Apple is one of the richest tech companies. They have billions in cash reserves. The rest cut headcount because it's one of your most expensive things on your payroll. It's one of your most expensive things on your balance book. Expensive, right? Then on the other end of the spectrum, you got people like you and me, consumers, who also have floating rate loans. Like, for example, my housing loan. I mentioned, I think, a couple of times before. I don't know if you all were aware. April last year, my housing loan was 1,004. As of November, my housing loan went down to 1,717 something, almost touching 1,800. Then I refinanced. Now my interest rate is 2.9%. My monthly is about 1,600. Still went up, which means, do I have more or less disposable income? I think make it rain. No, no, I've got slightly less. But because I have less disposable income and I know that there's a recession here, we know there's a recession, do I spend more or I spend less? I definitely spend less, right? And when there's less money from consumers like me and you going into the economy, businesses receive less money, they cannot grow, they contract, they fire more people. Then when everybody does it, eventually we are in what we call a recession, which is what we see now. And so I would say until manufacturing numbers come out better, consumer numbers, CPI index, consumer price index goes up, PMI index, purchasing manager index also goes up. Read up for all these things. Purchasing manager index, it gives you an indication of how bullish the market is going to be, whether they are going to be expanding or contracting. Until these numbers come out to be more favorable, then I say hold off first in terms of the stock market. Hold off first. Of course, continue dollar cost averaging. So this is what we can do today. All right, look at our pokok kurma. Make sure that we are allocating enough to equities. Because the worst thing for us to do now is to be underweight equities. We should be overweight equities, which means 80%, 90% even. If you're really aggressive, our company portfolio that I manage for our clients, that's $100 a month, by the way. People can start. So cheap, right? You know, anybody can start with a company portfolio properly allocated. We are 90% equities because it's come down so much. And just dollar cost average. Continue that into your pokok kurma. You'll be fine for the next 5 years. This recession won't last any longer, in my opinion, more than 5 years. You saw the charts from HIC, right? No recession lasted more than 5 years. To throw even more fuel onto the fire, Russia is still at war with Ukraine. It's been 1 year already. Right? If you all scroll back the Telegram group chat, how many of you had asked me, Afi, do you think Russia will invade Ukraine? I said, no, Russia will be stupid to invade Ukraine. They won't invade. The very next day, they invaded. It's been 1 year since I said that. I don't know if you all remember, it's there. Right? It's all the core memories that I have. Whatever Afiq say, don't listen. Tomorrow confirm happen. All right, so the war is still going on. Now, how is that significant? oil is no longer an issue. When they first started invading, I did recall saying that, oil price is going to go up because Russia is one of the biggest producers of oil. But now that Russia cut off the supply to most of Europe, threatening them and said, okay, we cut off so that you all will freeze during winter. That was not the outcome. In the end, most of Europe managed to get their oil from other places. And they had huge reserves. And in the end, oil price from spiking came back down, normalized to within the same prices as 1 year ago. So oil prices are okay, which means Russia is not going to be very, very desperate. They cannot surrender because it will lose face, right? Think about it. Huge, big-ass country cannot even take down Ukraine. At this point, I feel it's a war of ego now, where Putin, if he backs down, it's a show of weakness. But if he continues attacking, he's just going to start losing his resources and his people. I wouldn't be surprised if you start seeing mass protests in the streets of Russia soon. Really, because they're conscripting people already. Conscript means forced. We are all Singaporean men, so we are all conscript army, right? No choice. Got the letter, show up. If not, go to jail, right? That's a conscript army. So same things happening with Ukraine, Russia. So for now, long story short, continue your pokok kurma dollar cost averaging, overweight into equities. Okay? If you can afford it, put in some gold into your portfolio. I don't know if I shared with you all in the Telegram chat about Hugo Save. Hugo Save, I'll talk about Hugo Save in a bit. It's a gold savings app. A similar one, because when we have gold in our portfolio, it is a hedge against inflation. When interest rates and inflation go up, gold tends to go up together as well. So having some gold in a portfolio helps to even out your overall portfolio. And so let's talk about the apps for a bit. So I think I shared two in our group chat. One was one was Hugo Save, which compared to Hello Gold, which is in Malaysia, and Hello Gold is Sharia compliant. And there's another one by Wahid. I think I shared it. I can't remember. Wahid has their gold savings app as well, but it could just be in the UK. So how these gold savings account work is you are basically buying gold, small micro amounts of gold, and depositing it with them as an account. So it's a gold account. Then you can use it, withdraw as cash and then spend, or even come with a link with a debit card. You can spend it as if it's an account, but they deduct off in terms of gold. So say, for example, I put in $100 worth, right? I buy 1 gram of gold, for example, and that's worth, say, $100, for example, right? Gold price go up, gold price go down. I still have 1 gram. So my account balance will show 1 gram worth, say, today $100, tomorrow 120, for example. I have a debit card, I swipe, I spend, then they minus off that value in that sense. Then I can top up, I can buy more gold, I can withdraw in physical gold as well. So Hello Gold in Malaysia is Sharia compliant. Why? Because number one, of course, they're certified. How did they get the certification? They are physical backed. That means whatever gold that you buy in, that company has the equivalent reserves in physical gold. It's not an option, it's not a derivative. So it becomes Sharia compliant because it is physical gold backed. Now, this is interesting and very exciting simply because in 1971, the US dollar was taken off the gold standard. Pre-1971, the Bretton Woods Agreement, you could go to the US bank, go with $1, they will give you a certain amount of gold. That's what it means to be gold backed. Then in 1971, Richard Nixon took off the gold standard, which means the US government could just print money like crazy. No need to have, I got gold reserves, no need. So if you fast forward to today, you start seeing these gold savings accounts. You start realizing people wanting to go back to the old gold standard, because then your money has value. Today, money got no value. You can print and print and print. But if you have a gold-backed currency, then all of a sudden, people can go to the account. Now, here's the cash, the fiat money. Give me my physical gold. There's value to it. So I wouldn't be surprised if in our lifetimes, we start to see more and more and more of this. And eventually, we might even go back to the gold standard, inshallah. That would spell the end of the current financial system as we know it. Not a bad thing. Not a bad thing. You won't see like massive collapse. So you see the bank start shifting to that model. Okay. Hopefully that happens. So back to having gold in your account. You can start. It's exciting for me for two reasons. Number one, you can treat it as part of your pokok kurma allocation. If I say I do $500 every month into my funds on Fund Supermart, right? And I got extra $100, I can do this $100 into the gold account, micro savings in gold. Because if I do a gold ETF, it's going to cost me $250. Last I checked, per share on SGX. Let's just open it up. It was called GSD. GSD. Spider Gold shares. There we go. GSD.SI. $231. Spider Gold shares. 231 Sing dollars per share. You know, for sometimes $230, some folks expensive, right? But if the micro savings on Hugo Save, I can put in $50. I can put in $100. Why not? You still get your exposure, right, to actual gold. That's number one. Number two, it works as a checking account. If I need to swipe, I can swipe. So yeah. So to me, that's quite exciting. You know, so we have that in terms of what we can do. Ms. Renee, you have a question?
Yeah.
Go ahead.
I'm not too sure if you've heard, because I kan tak boleh duduk diam with just one thing. I must I just have but then I have always had my sights on gold for a while. I only recently then I realized that yeah, it's good to have, but not 916 gold lah. I want the 999 gold.
Yeah.
So
It's investment grade, right?
so what I've heard or rather looked up is public gold, also
Yeah.
based in Malaysia.
Yes.
But because they sell like the actual gold bar lah.
Yeah.
Even though it's like 1 gram, which is, I think, this is very good to have. Like they even have things like yeah, you buy 1 gram every month lah. Or macam if you have more, you can buy like 5 dinar. The 5
you know what,
dinar
when I
coin.
talk about dinar, you must have the certification.
Yeah, I was
Buy from a
looking.
reputable source. Don't suka-suka, oh kawan aku jual dinar. Jangan.
Yeah, of course. Because I was yeah lah, looking at it as well. Because Hugo Save as well, I open really just for fun. But it's nice to have that actual thing. But yeah, I'm just wondering if you heard about public gold.
Yeah, I know. I'm aware of public gold, and public gold is Malaysia. So
Yeah, correct.
So yeah, but public gold is Malaysia. That's why when Hugo Save came out in Singapore, I was quite excited because then we have a local option, you see. Another way, of course, and okay, so just to set the record straight, you buy physical gold is nothing to do with Sharia compliant or not, because it is physical gold. There is no such thing as halal haram. It is physical gold.
Yeah.
You don't need like a cert.
Even if let's say I buy at the jewelry shop, but the 999 punya grade, not 916 or 999 punya,
fine.
It's still ini juga kan?
Correct, because when you buy from a reputable source, especially if it's a bar or a wafer, they are printed with a serial number. It's stamped with a serial number, so you know they can track. That's fine. But if you buy an unmarked bar, sekali ada the Nazi symbol. Nazi symbol. Tu dah lain. But you get what I mean, right? You know what I mean?
Yeah.
Sometimes you buy from a reputable source, you buy physical gold, and you know that purity is whatever, whether it's 916, whether it's 999, it's fine. Sharia-wise, it's okay because dia tak ada halal haram when it comes to that. The halal haram comes in when you buy synthetic ETF, synthetic gold. You buy a gold certificate. That one tak boleh.
Understand. Then I was just talking to my friend, say, maybe we should just beli je lah 916. Kalau tak beli, kalau ada duit lebih, beli 999 punya bangle, but jangan pakai hari-hari. It's just like something nice that I can wear, but I can keep, and also in.
Good strategy. Good strategy. I acknowledge you for that. Good strategy. You know?
Yeah, so it's just that I've been collecting macam juri.
Alhamdulillah. I hope one day when we meet in person, then you tell me, Afiq, I finally hit 10 kilos of gold. Berat aku nak pakai. Tengok bicep aku besar.
10 gram nak beli je dah. Okay.
We start small. We really start small. Remember I told you all the story of my client who showed me her not fixed deposit, safe deposit box. right? Where her mother was the one doing the dollar cost averaging into gold. And this lady, when I met her, was already 60 plus. So mother, imagine, almost maybe plus minus 100 years ago, right? Every week would buy gold, buy gold, buy gold. Whatever spare cash. She bought and bought and bought and bought. And then this lady, when she's 60, she showed me her safe deposit book, asked me to help her carry it down. 30 kilos of gold. Imagine that. Buka, fuyo, treasure box, literally a treasure box. But 100 years You know what I mean? They collect from age 20 plus, kerja, collect. Then she continued the tradition. So it takes time. Right? Alright, so I've given you all the market update. I've talked about gold a little bit. Okay, so let's go into questions. Any questions you all have? We already answered the gold part from Ms. Renee. Anything else? Questions?
Okay. So I have a physical goal, like Miss Renee say. I sometimes buy 1 gram, 5 gram. So this should be under the allocation of the 10% of my portfolio also, right? So I should monitor them also, right?
Yes. Yes and no. I will give you the answer. It depends on your objective. So be very clear. If you say, I want to have a pokok kurma, right? And this goal is meant to be my pokok kurma allocation, then you treat it that way. I also have people who say, this is my gold fund. Every month, I got a few $100. I just buy gold. I just want to accumulate for really long term sampai aku dah retire. This one, I will pass it on to my children. They will continue to accumulate. Pun boleh. Because the difference in mindset is when it's in your pokok kurma, you must know when to rebalance. If gold go up and your allocation from 10% go up to 20%. Has that happened in certain years? Yes. In 2009, gold price shot up, right? Because interest rate dropped, stock market dropped, gold price shot up. Your allocation, the grams of gold can become 20, maybe even 30%. Is that time to sell off and then buy stocks?
Okay.
Versus my other friend who accumulate gold, 2009 gold price go up, he buy more. Dia tak nak beli stock. I want to buy gold. See stock market crash, I only buy gold. So it depends on your objective, and you must be clear why. Right? Okay. Some people buy gold to wear, jewelry. Right. I hope they answered the question.
Okay. Yeah.
Any more questions?
Actually, I think what would you suggest that we do now for someone? Let's say for myself, right? Me and my future spouse is going to start basically investing together, right? Because basically, for myself, when I started investing last year, I primarily just focused on the just stocks, right? I just bought Tesla. So right now, basically, I haven't started on my Coca-Cola yet. So neither has my fiance. So we are thinking what would be the best approach now. Because now basically I would think the AIA plans that she's done, we cannot continue now. One, because it's not halal, right? Then that was plans on.
Okay.
So I was thinking should we just start off with the Franklin Templeton funds, the Sharia Compliant funds, the one that you suggested us to.
Yeah, why not?
Then just now you were saying we should be overweight in equities now. What do you mean by that?
Yes. I'm just checking some of my news here, but yes, overweight equities. So the thing is, if you're not sure what to do, right? First off, look at your current situation. Forecast. Remember, I always say in your investing plan, have a timeline. Right? So now you have a clear timeline. July, you're going to get married. Right? Are you going to buy a house? How much will you need for your house? Once you get a house, when are you going to move in? Do you need to renovate? Once you are renovated, and then you move in, are you going to have kids? Once you have kids, when are they going to graduate? When are they going to spend it? So draw that timeline. And in a really worst case scenario, you only roughly can do a little bit here and there, but you're still not sure, and you have enough money to start, do $100 a month. Just dollar cost average into, for example, Templeton Sharia Global Equity. Just do that. Give it the next 6 months, 12 months, you already get a hang of it. It becomes a habit. Then at the end of the year, you have accumulated 1,002, rebalance to 80-20 or 90-10, depending. Right? But you've already started. You already cut your teeth on it. You understand how to do it. You see how the market moves. You understand your emotions. Then, as life goes on, you start having more budget. Then you increase. Then you say, okay, maybe I got $200. Can I do 100 into Templeton Sharia Global Equity, 100 into Maybank Asian Growth? Then I have roughly an 80-20 allocation already. Right? Then I got more budget. I got $300 a month, for example. Can I do 100 in Templeton Sharia Global Equity, 100 into Franklin Global Technology, for example, the Sharia Technology Fund? Then can I do another 100 in Maybank Asian Growth? You can start playing with that numbers, because as you go along, you can start allocating, and as your portfolio grows bit by bit by bit, you can rebalance to the right funds that you want. You know what I'm saying?
Yeah. Okay, wait, were you talking about the Global Technology Fund by Franklin Templeton?
Franklin Sharia Technology.
Because I mean, I was asking my fiancée, right? Then she gave me these 3 funds, and I don't think it's Sharia compliant at all.
Global Tech is not. Sharia Technology is. Download the
Yeah,
ebook again. Here, go to my website, the ebook. I updated it.
Okay, can.
So there's only
the
6.
one that-
There's only 6. Templeton Sharia Global Equity Fund, Franklin Sharia Technology, Maybank Asian Growth, Maybank Global Sukuk. Hang on, my brain cram a bit. DWS Noor Precious Metals. And there's one more which is Franklin Global Sukuk. So there's 6 funds that are Sharia compliant.
Yeah.
These are the ones
Okay.
I would honestly recommend. There's another one called the Principal, however you want to say it, Principal Dali Opportunities Fund. That one invests in Malaysian equities, and its performance is crap. Because the Malaysian economy can be better. And the 3 that you just showed me in here,
Confirm blast out. Yeah, I know already. When I saw the segregation of funds, like the top companies, then I was like, yeah, cannot, this one cannot really, this one cannot really. Well, the first thing I was thinking about was purification. So, but then the insurance agent was also saying that if you were to do an early termination, so we won't get any payout. So my fiancé has already put about 10,000 already for the past 2 years. So basically, if you don't continue with it, just to get a 0 because it's a front loading.
Switch to the AIA Sharia Diversified Fund.
Yeah, what is it?
With AIA, right? AIA has the Sharia Global Diversified Fund. They just launched it, I think, 3-4 months ago.
That one with Templeton also, right?
The thing about
Yeah, with
the
Templeton.
Sharia Diversified Fund, it is a fund that buys into Templeton Sharia Global Equity,
Yeah,
Franklin Global Sharia,
that's right.
and Franklin Sukuk. So it's
In the end, it's still the same, right? If we buy like from FSM1.
it's just there's another additional layer of fees. Sakit hati kan?
Yeah. Actually, the other thing that I realized is not good with buying with AIA is just that, okay, like, because we don't know, like, how like finances will be in the future, right? Let's say, for example, like you don't have that cash flow.
Yeah.
So the thing is, you always have this premium to pay, right? So if let's say you were to miss your premium dates, then I'm pretty sure there's gonna be like fees or like penalties lah. So the thing by doing it yourself is that, if let's say, for example, for a specific month, that you are a bit short and everything, you can still like, okay, then for next month I will put in more.
Yeah.
It will compensate that way lah. But for this was very rigid. So I saw the amount, I was like, wow, that's quite a fair bit of money.
Yeah.
Yeah.
Understand.
Yeah.
Another reason why I don't like ILBs.
Okay lah, can lah.
All right. Any more questions? Can take one last one before we end for the night.
Sorry, do you offer like like this kind of services to help plan?
It's
like
to
offer services to like help plan for like investments.
Yes.
Okay.
I'm a wealth manager. What I have.
Yeah. But as in, like, how much is it?
$100 a month.
Really? $100? No, as in, like, because the thing I'm trying to see is that because I don't think I want to continue the AI things, right? So we want to basically start fresh for me and my fiancée.
Okay, so to give you what we do
Yeah.
considering that you've already went through HIC, so for
Yeah.
our students who've gone through HIC, I waive off the planning fee, I waive off the implementation fee. So that's about $1,500 waived off already because you all already understand my methodology. So when I start talking about it, I save time, no need to plan for you all. Okay,
Yeah.
so we waive off that one. So the Sharia portfolios that we have different allocations from conservative, where it's 10-90, to growth, which is 90-10. We have that and everything in between. And it's all allocated to the 6 different funds that I mentioned. Allocated. It's $100 a month.
Oh, is this available on your website? Or like how do I like how if let's say we want to do this, right, then how can we do it?
Let me know. Just drop me a text. We'll take it offline. But if you want, let me send you. I'll send it in our group chat so everybody can have a look at our Sharia portfolios. Yeah. The good news about the Sharia portfolio is that it is simple to start. Very, very easy.
Yeah. The 6 that you mentioned, right, Afiq?
When you read through, you'll see it. Then another thing to take note is, okay, just send it to our Zoom chat. Another thing to take note about this particular one is when you look at performance, you will say, how come the performance is very bad? Because when you look at it from a lump sum perspective, you start like that, you go up, you go down, you end up like that. This does not factor in dollar cost averaging.
Yeah.
So when your dollar cost averaging as the market is coming down, especially way back in 08, and then in 2011, and then in 2017, if you were dollar cost averaging during these periods of time, all my clients who did this are all profitable, even though the fact sheet tells them you only made 1%.
Oh yeah, true.
Right? It's insane. When I send them the thing, they say, how come the portfolio say I make 1%, but the profit is much, much more? I said, well, that is the flaw in how you do reporting. Right?
Yeah.
So when you see it, just understand the context that sometimes the reported performance is not accurate because of the way they calculate.
Yeah.
Right? Okay. So if you need help with that, just drop me a text, can chat privately.
Okay.
I need a favor from everybody. First off, everybody smile.
Let me.
How you do that? Okay, 1, 2, 3, smile. Hang on. Okay, smile. All right, nice. All right. So that's favor number 1. Favor number 2. Can you write this out inside our Telegram group chat? Okay. So today I just give you this. So whatever I've given you today, think about number 1. What have you seen and heard? What did I share today? What have you seen, what you heard? Okay. Number 2, why is it important to you? And number 3, how are you going to apply it? Now put this into the Telegram chat. Okay, put this into the Telegram chat, our Halal Investor Club, because my favorite thing is this: you all learn something, right?
Yeah.
When you share what you learn, other people pick it up, they learn something, they want to share as well. And then when they share, you read what they learn, you pick it up, you learn something else. So it's a positive cycle. Okay. Versus study, okay, done, forget. Right? Whatever you learn, you share. And of course, from an Islamic perspective, you share whatever you learn, somebody else picks it up, uses it, it's a wakaf as well. Okay. All right. So folks, thank you so much for staying with me for the past 1 hour. It's been fantastic. I want to acknowledge you 3 for taking the effort. Look out for this upload on our YouTube channel later on. I'll post it on our Telegram chat as well. Remember to do the sharing for me and for yourself as well. So once again, I enjoy seeing you all. Thank you so much. I will see you all at the next one soon, inshallah. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thanks, Afiq.
Waalaikumsalam.
Bye.
Good night, everybody.
Thank you.